So what's triggering bounce back loan investigations by the insolvency servers that can potentially lead to a director being disqualified and, in an extreme case, being subject to criminal proceedings? Well, there are essentially really only two issues that dominate those investigations. The first one was whether or not the business, when it applied for the bounce back loan, had the required level of turnover, and the other is what the loan was actually used on. Now, in the case of the turnover point, when a director or a business or a company applied for a bounce back loan, it had to declare the level of turnover in 2019. And essentially, the reason for that was because for the calendar year 2019, the maximum loan that a director could take out was one which was 25% of the level of turnover. And turnover was either the business turnover for the calendar year 2019 if it had been trading as at the 1st of January 2019, or alternatively, if it hadn't started trading until after the 1st of January 2019, then there was scope for a director, for example, to estimate the level of turnover. And what we're seeing is a number of directors have been and are being subject to disqualification proceedings because on the application form, where they had to make a declaration about their turnover, they misstated the level of their turnover, perhaps inflated it, perhaps in some cases dishonestly suggested it was far in excess of the level that it was. And so in some instances, directors have actually been subject to criminal proceedings and been subject to conviction. Now, the other aspect that's triggering bounce back loan investigations in particular is whether or not the loan was used for the purpose that it was designed for. Remember, the idea behind the bounce back loan was it was monies that was given to safeguard businesses affected by the pandemic, and it had to be used for the economic benefit of the business. If it wasn't, then the bounce back loan was conceivably misused and improperly used, and as a result, that is also a matter that can lead to disqualification. Certainly, there have been instances where directors have simply taken the bounce back loan that they received and then immediately transferred it into their own personal bank account, and that was plainly not allowed. In the same way, some directors have taken those bounce back loans, repaid their own loans that they may have lent to the company, which would have caused problems because, again, the idea behind the bounce back loan wasn't to enable a director to repay monies that they'd lent to the company, or for them to take dividends and so on. The other side of things, a bit less common but does arise, is that we have seen instances where some directors have taken out two bounce back loans for a single company, and that was simply impermissible. Other directors hadn't had any trading or hadn't commenced trading by the 1st of March 2020. Again, another reason why the application for the bounce back loan would have been invalid and can lead to disqualification proceedings.